Hello everybody, welcome to this weekend's chart analysis video for silver and the United States dollar index. My name's Derek. We'll take a look first at this silver chart. On the Thursday session, I was mentioning the pattern of a cup and handle formation, which isn't anything too special. Just after you're in a down move, you go up somewhere, and it doesn't matter where, just somewhere, but it has to make a higher low, which was the case in here, then manage to break the previous resistance, which has been the case. Friday's session was a sideways consolidation after a 3.5% up day, and this 18 average band is now moving sideways. It will remain sideways unless it can have a clear breakout past this resistance. And of course, it has to hold the 18 average of lows to stay sideways as well. Because we're in a major bear market, or have been, there's really two things that is noteworthy of considering. And the first one is you can have these rallies, maybe even go up to this area here, and that doesn't mean that the lows are placed in for this run. But at the same point, the bull market is going to happen at some point. You could have people say, let's just assume that maybe it gets up to, say, 21 or the high 20s. And then on the say that morning it falls down below 20, and the next day it falls down to 1850. Oh man, now we'd be saying this is a bull trap or failed move, creating fast moves in the opposite direction. Oh, I'm gonna sell at 1865 or something. And then a day or two later, they're right. It goes down to 17 and a quarter or 1675 or something in that ballpark area. But there's still a very good chance that maybe 6 weeks after that, I'm talking about, okay, we're finally having a test of 26. So it's one of those situations that you know a bull market is going to be coming. It's just very difficult to determine when. Now, as far as this 18 average, what I look for change in directions, you can see it's been in this major downtrend, is one of two things. One, it has to really burst higher. That's the rarity, but possible. But a situation where it can have a significant gain above it. And that would be in the 21s up to here. And then that would make this 18 average start to go higher. And any type of test within the band that comes down. Then when you establish whatever resistance, let's assume it comes up to the line at 21.5, then on a break above it would be situations where you can start to consider it for a possible intermediate term bull market. It did close above this 18 average of highs, which is set at 1982. Which means as long as it can stay above that on Monday, we might have the first day in a long time where the complete daily price action would stay above it. But for now, it's still got a long ways to go before you can consider it to be in a very bullish state. Here's a possible trend line. Maybe this is an area where resistance may be met, but just something to consider. On the weekly chart, of course, you can just see how much of a major down move this was, and it's got a long ways to go before this thing can be bullish itself, because this is a straight, large rate of descent on this moving average, a front-weighted 18 moving average of the last 18 periods. The 18 average of lows is set at 21.16 now, which means it's got to gain about $1.18 just to touch that level, and that, of course, is over 5%. So again, it's got a long ways to go, but as I've stated on so many times, and it's like this with any chart. You got the difference of the bulls have their move and the bears and the bulls, then the bears having a superb move. And the bulls are going to have their move at some time, and you can expect some superb moves on their part. Now, of course, this is a manipulated market, and it has been ever since and for or longer than I've been alive, and I've been alive since the 1970s. And the question is it just going to stay down because it's manipulated? And what I stated in a previous video is silver prices will go higher if the powers that be want them to, as these lower areas very well could be the areas where they try to cover as many shorts as possible, get as much of the physical at dirt cheap prices, and if they want to go higher, then it'll be easy for them to do. Maybe they don't want to go higher and there's nothing they can do about it. After all, if they want to keep this lower, then why do we even see numbers with why wouldn't the numbers be like something like this? Just where it'd be like $1.50 or $3.50. After all, they manipulated it down from 50 to 4 and kept it in the 4 to 6, 7 range for over 2 full decades. Now, the final chart will be the US dollar index. I was talking about this a couple days ago, and I'm not going to put any of the lines in here because it just makes it look a lot worse and it's not needed. But here you have a situation where you were making these patterns of lower highs and lower lows. Well, since this point, you have a lower low, and then you made a higher high, which was followed by a lower low, which has then been followed with another higher high, and it has retraced a decent amount. This is a very wild chart. Normally in trends, bull trends is higher highs, higher lows. Bear trends, lower highs and lower lows. And then you get the odd somewhat common chart where it's something like this, where you make a pattern of lower highs and higher lows, thus creating symmetrical triangles. And that's a form of indecision with a decent chance of a good move on either direction, because you don't know if it's going to be bullish, and then sometimes you got this, either this is the bull trap and it's going to go lower, or it is the real move and it's going to go way higher. Well, this is the same sort of situation of, you can say indecision, but a big move are ready to take place. And simply by looking at the chart, you cannot tell if the big move is going to be a significant break above 85 or if it's going to break below really 80, which is a major long-term level. But it's just something to keep your eye on because it's an extremely rare pattern to have that of higher highs and lower lows. So thank you for tuning in, and I'll talk with you next week. Bye-bye.